take that conversation forward with K Ganesh, founder with GrowthStory, and with him we've got Karthik Reddy, co-founder and managing director with Blume Ventures. Gentlemen, good morning. Thank you for joining us, Ganesh. This is a big week, and this is a big week for the IPO market. Let's start with something which you understand as an investor and as somebody who's invested in some of the startup companies right at its inception. Nazara. It's a gaming company which is going public. Is India ready for such niche players and for such niche companies?
No, I think this has been long overdue. So from a startup ecosystem, from a tech ecosystem, this is great news. We obviously, the startups and the entire startup ecosystem have stayed away from public market for multiple reasons in India. One is obviously the need for profitability and predictable way. That has been a challenge. So we have seen only IT companies, whether it was Infosys or more established companies actually going public. We're not seeing startups there. So even Nazara also is not a startup. They have been around for a long time. They have perfected the business model. So what I really would love to see is, like you see in NASDAQ, not profit-making, high-growth, disruptive companies coming and listing in the Indian market and actually be able to make money for Indian investors. One of our pet peeves, and we talk about digital colonization, we talk about foreign investors make money. One of my pet peeves is whether it's Flipkart or it's Big Basket or it's any of the stellar successes, most of the money gains have been made by investors who are foreign investors. So the Indian retail investor, the Indian citizen has been kept out of the value creation in the entire new age economy businesses or venture-backed businesses. I hope that changes. That will change only if we have a lot more relaxation and depth in the Indian market, that a company which is not profit-making yet, but which is high growth, which is changing the complete ecosystem, the way future is going, people are going to behave in future, those companies are able to come and list like you are able to do in NASDAQ or in other markets.
Karthik, you think we are still a distance away from some of the companies? They may be big in terms of their scope, big in terms of growth, important in terms of relevance and great management bandwidth, but ultimately if they are not making money, the Indian regulator will not allow them to raise money from India. Do you think we are still a distance away when some of the companies which we relate to but are still loss-making will not go public?
I think the regulator has become far more, far-sighted than we give them credit for. Conversations have been on for many years now, and I think we're at the cusp of seeing that breakout happen. I think what will happen is there will be far more hawk-eyed about, reporting, availability to the retail portion of the public issue and how much should go to QIBs. As we've seen even before, we have seen that there has been a framework which has allowed certain companies of that nature to go public. So I think the confidence hasn't come because of the scale of these tech companies or the volume of tech companies coming into the public markets and the public in some sense or institutional backers who will eventually come into these companies, getting comfort with the business models. So it's always been a chicken and egg problem, and everyone's had this debate on why we haven't had more in the last 10 years. Even Make My Trip, I think, listed overseas 10 years ago. But if you look at the interim, tech-enabled businesses or arguably what were built on the internet, but long-term businesses which did show marginal profitability, Just Dial, IndiaMart, even companies like TeamLease, Affle, Root Mobile. So these are not conventional IT service companies. These are not new age hot consumer tech companies. They're somewhere in between. They rely on the internet infrastructure of this country to serve customers on the shores of this country, but have shown phenomenal growth post-listing, right? These have grown 5x to 10x in the last 4-5 years since listing, and something like a Root Mobile grew like 100% in 6 months post listing. So I think there is appetite. which is the starting point. I think we underestimate the regulator, the retail investors, the institutional investors, and it's nobody's fault in particular. But I think there was a tentativeness prior to this, and I think that's going to get unshackled starting this year. And yes, there is, as you said, maybe the regulator will take a view that we need to be more benign to these companies listing in overseas markets if we can't absorb that risk here. And that is happening on a parallel track. But I wouldn't be surprised if the Zomatos of the world and deliveries and the lens carts all start listing on Indian markets very, very quickly, because there will be a brand premium to them in this market that may or may not get on NASDAQ as well. So it'll be a very proud moment to see all these companies discover their true value in the public markets. And I think it's around the corner.
Ganesh, now we've seen the theme of tech, not just the old school IT services as we used to know, but it's expanding to so much more. Even globally, it's not just the traditional FANG stories that we see. Do you think that even when it comes to the Indian story and in the Indian context, we can see this AI-related themes, related to a number of sectors? And how do you believe this could transform the corporate landscape as well?
No, so there are two different aspects to it. One, clearly the metrics that the Indian market analysts, the Indian retail investor, the metrics they use to evaluate companies is very different than what the venture capital PE investors use to evaluate. So there lies the dichotomy or divergence. Why I cannot list a company which otherwise gets valued very highly in the private equity venture capital ecosystem. I'm able to raise a lot of money. I'm not able to come and list here because in your show, the analyst who comes, we talked earlier about earnings. I don't think it's only about earnings. It is about what is the value of a company that's able to define a sector, whether it's a Flipkart in retail or Big Basket in grocery. What is the value of that? That cannot be captured by today's earnings, tomorrow's earnings, next quarter earnings to be able to do that. So unless this divergence is somehow bridged, you will always have a challenge. I mean, I hope and pray that what Karthik mentioned, that bullishness is actually happens and shared, as they say, uske muh mein ghee shakkar, but I think we are still very far away. From a corporate landscape, I still think we are at a traditional situation where the companies get valued on earnings per share, growth in earnings per share. Therefore, the market, the analysts, the media, and the retail investor are not valuing it. That is the reason in India you see corporates have been very shy of doing strong M&A acquisition. There is no reason why a Flipkart or a Big Basket could not have been started and funded and majority owned by a Infosys or a Reliance or a Tata Group. There's no reason at all. The only reason is because if they were to do an acquisition, it will be a non-profit making acquisition. Therefore, earnings per share will come down. Therefore, the market cap will come down. Therefore, they don't want to do it. Somehow we have to change this. Otherwise, the corporates play in this is very, very, very limited. Markets are not rewarding that. I think those are the two perspectives that I see is a challenge to be able to do it. Again, would love to see a very strong Indian stock market listing by startups and capturing of value by Indian investors and Indian retail investors. But I think we are very far away from that, despite great initiatives being undertaken by the regulator. Regulator is only one part of it. The retail investor has to understand, believe, and go by similar metrics that a VCPE guy uses to evaluate companies and reward them.
Karthik, do you think we're still, far away from that, and that what has been done by the regulators is one story, but we need more participation, more interest by retail investors in order to ensure that the corporate M&A play grows?
No, I know we speak about retail and we speak about public listings as a means of being in the retail eye, but you and I know that we first need the big institutions to have courage, the public market buyers who are institutional investors. And 2-3 points to add to what Ganesh said, and I'll try and flip some of those concerns to optimism. I'm going to try and be the optimistic guy here. One is, of course, to Ganesh's credit of being one of the early investors in Big Basket. Today the Tatas have bought them, so you can clearly see that needle is beginning to move, right? So the Indian corporate landscape is beginning to recognize this. I was just having a coffee catch-up with one of my star founders on Friday, and he said he was approached by yet another corporate. Then, as you know, the Mahindras bought FirstCry, and it's turned it around, became a unicorn.
Very, very small, Karthik. Very, very rare.
No, I know. So I'm just saying initial sort of green shoots on that trend. Second is it's incredible the number of institutional brokerages which have put out unicorn and upcoming tech reports in the last 6 to 9 months. I've seen, I get a deck in our internal team group once a week now, whether it's Credit Suisse, whether it's Bank of America, or whether it's IFL. So IFL, as you know, took up the pre-IPO position in Nazara, and I think it's a part of the secondary sale. So I think institutional buyers believing that this is for real and it is moving in that direction is very positive. The third is clearly, even when you look at Zomato's, new investors, a lot of them are pre-IPO US public market investors. So I think there is belief, like in the private markets, we had belief from the overseas investors who first showed the way. And now we are seeing a lot of Indian family office, HNI, money, backing fund managers like us and backing companies, by the way. We'll probably see a similar trend line. And the fact that we have overseas comparables makes it a little bit more palatable. To the point, I think one point maybe that you didn't find answered is, yes, it's not going to be limited to the hot, sexy consumer internet startups alone. I think there are very credible B2B behemoths coming. A lot of them are overseas incorporated, so they might list on NASDAQ. To Ganesh's point, Indian investors may or may not be able to see the wealth creation in those even post-public. But I think a similar trend line, like how we saw InfoEdge and IndiaMart, I'm hoping that we have a few companies which are not massive. Maybe they list at a few $100 million. But a lot of the value creation can happen in the public markets. They can grow into becoming a $2 billion, $3 billion company, the 10x journey like IndiaMart had post-public. I think those journeys I'm very, very encouraged by. I think we will have more of those stories, the more of the Nazaras and the IndiaMarts also show the way. So combination of all of these, I feel, is the tailwinds that are driving my optimism, at least for the next couple of years.
Okay. Ganesh, I want to also ask you about the entire SPAC or SPAC method and whether or not you feel that's an interesting option. I mean, we've seen Renew Power do it fairly, effectively in recent times. I mean, in terms of advantages, of course, valuation, but also the fact that they're sponsored by institutional investors, which could help with global recognition as well as capital access. What do you make of that route for some of these companies?
No, I think SPAC has really caught the fancy in the international market. So it's a great way to address or handle some of the challenges of regulatory requirement, the time frame, and the cost of going public. So it doesn't go away completely, but it does ease. That's how you see increasingly a huge number of companies internationally taking the SPAC route to IPO. It also addresses one concern that are we leaving money on the table and all that stuff, so that it's taken care of. We have not, right now, Indian companies have not seen, but Indian companies which are headquartered outside, where the jurisdiction, where the registration is outside, we can do it. Otherwise, the way I understand it, I'm not an expert on this, is that we still need to flip the holding company from in India to Singapore or outside to be able to list in a SPAC. In that situation, again, how do we do that without having capital gains leakage for the shareholders is a challenge. But at a conceptual level, definitely SPAC or blank shell companies, what used to be earlier, but now we have a nice mechanism through SPAC to be able to do it. I definitely see it as a way. I don't know about specific details of Renew Power on where the holding structure is and how they are flipping it and how it's being done, but definitely it's a good option, because the effort and regulatory compliance, the time from the start, filing of red herring prospectus to list, all of that deters startup and founders from getting into this. Other than, of course, other stuff, I would rather use the same time as a startup founder or entrepreneur to go and raise money from venture capital or private equity investor. Much smaller time frame, much less hassles in terms of due diligence, compliance, disclosures, and all of those. I don't know what does Karthik feel about that, but that's why I see SPAC. But if you can make SPAC a possibility for Indian companies registered in India to be able to do that, I think it gives one additional option. How many people will take it, I don't know, but we need all the options. Listing in US, ability to list first in US without requirement for Indian listing, easing of norms in the Indian stock market for startups, non-profit making companies to be able to go and list in certain sectors, SPAC for Indian companies in the Indian market. All of that, I think, would help greatly in creating wealth, getting Indian investor participation. More importantly, from my entrepreneurial ecosystem, creating jobs and employments in India.